Tunisia, because the Central Bank of Tunisia has asked for the suspension of distribution of dividends of banks. The bank managers who admitted the necessity of the decision argued that the situation could have been implemented in a different way. Details of that in this report.
The head of the Union of Maghreb Banks says the suspension of the distribution of dividends is a preventive measure because 2020 is expected to be a very difficult fiscal year for the banking sector that will need additional resources to manage high risks.
The banking sector regulator has asked us to refrain from carrying out any operation to buy back our shares. We are willing to contribute even further to limiting the impact of the crisis by supporting the state efforts. The banking sector has donated to the National Fund for the Health Sector 112 million dinars, which is around $40 million.
Ahmed Karam adds that the banking sector has made many sacrifices in a bid to support the national economy and to boost consumption in the post-COVID-19 crisis.
This is a necessary decision by the central bank, but it could have been implemented differently by studying the files of the banks case by case. The suspension of the distribution of dividends could have been imposed on the banks facing financial difficulties, while banks making profits and respecting regulations could have distributed dividends, especially to small shareholders.
Economists assert that the impact of the postponement of loans maturities granted by banks to individuals for 3 months will result in a loss of income on the net banking product by nearly $209 million for the entire Tunisian banking sector.
The governor of the Central Bank of Tunisia has stressed the need to put in place the necessary measures to encourage banks to provide funding to economic operators, especially those affected by the COVID-19 crisis.
Well, viewers, that report there in Tunisia.